Welcome to this week's episode of the Pink Property Podcast. In this episode, we're going to discuss the recent interest rate rises and how that's going to affect the property market locally. You're listening to the Pink Property Podcast, where each week we will discuss hot property topics, introduce you to members of our team as well as special guests, and let you know about all the things that are going on at David Lee. Thanks for joining us this week, and as I said, we're going to cover the interest rate rise that happened this week. The Bank of England were muted. It was probably the world's worst kept secret that it was going to move, but it has moved for another consecutive time by another 0.25%. So the Bank of England base rate is now sitting at 1%. And that's actually, believe it or not, the highest it's been since 2009, which is astonishing, really. We've had such low rates for such a long time. And even 1% is not a high rate. Don't get me wrong, we're not hitting the panic button here. But we wanted to talk to you today about how that impacts the property market, whether you're a homeowner, a buyer, or someone potentially thinking about considering purchasing, and just sort of how that's impacting the market in general.
Yeah, absolutely. We're getting questioned a lot now that's happened. So people are concerned about what's the market going to look like, not just through the interest rate rise, but cost of living. So much is happening at the moment. Also our predictions for this year, what it's going to look like, and obviously with this recent interest rate increase, it's going to affect everyone's life. Unless you're on a fixed rate mortgage, your mortgage payments are going up. If you are on a fixed payment, fixed term, but that's going to run out at some point, you're going to be paying more money, very likely, when you remortgage or pick a new rate in the future. So
the majority of people will generally be on some sort of deal with their mortgage. So they'll be on a period of, like you said, either a fixed rate or a discounted rate, or for a period of years, whether 2, 3, 4, 5, 10 year sort of deals. But people can often let these lapse, and they don't tend to move quickly enough in order to sort and secure a new deal before you move on to the variable rate, and that's where the pinch is going to come. So if you're sitting on a variable rate, for instance, you might have been paying 1.8%, and you could almost immediately move to 4.5 to 5%. So it's really quite a jump that you can make just by reverting back to the standard variable rate of the banks.
And I think anyone who's on a fixed rate or a deal that's 2 or 3 years, when that comes to an end, everyone's going to be paying more money this time.
It's definitely going to be more on it.
It's
absolutely.
going to be a bit of a shock, certainly for some people that have moved in that last 2 or 3 years, whether it be your first home or you've moved house for a bigger mortgage. It's going to be a pinch.
It is going to be a bit more.
When that changes. So that's going to affect life. Plus, these other increases in life with your utility bills going up and the rest of cost of living. So, I think you need to pre-game that and start thinking about it now. Yeah,
because obviously they're now talking around sort of inflationary numbers as well in across the UK. In March, it was 7% inflation. They're saying by the end of the year, it'll be 10%. And obviously that's one of the major reasons they've put this increase in place in the base rate to try to cool things off. What are we seeing now in the market in terms of that effect? Are we directly seeing those effects yet, or are we seeing the early effects of what that might cause?
No immediate effect yet, but obviously we're in this all day, every day, so we consider it more often than you as the customer. But we are getting quizzed on it, and people are asking the question, what's this going to do to the housing market over the next, certainly till the rest of the year. We haven't seen a tail off of prices or activity yet, but I do think that's to come. It depends on your location as well. I think different areas are in different bubbles, and they're a bit more protected than others. But I do think, house prices after the summer, when we get into the quarter 4 of this year, I think they might slow down quite a bit. I think we're going to level. Whether we see a drop off yet, hard to tell, but certainly going to sort of quieten down. So that keen activity in that busy market, that is now.
Well, I mean, comparing that to where we were at and what we've been sort of seeing and experiencing across most regions of the areas that we work, sort of a 10% rise over the last year.
Yeah,
we're definitely not going to see that this year. That isn't going to be repeated.
No.
We're going to see, I think, a very small percentage increase in prices over that sort of 12-month period, but we're not going to see that sort of what might be called explosive growth, 10%, unsustainable growth really over a long period. And hopefully it will ease off. I don't think it's sort of, again, like panic moment, because we're not. We gained 10% last year, you know. If we only grow 2% next year over the 2 years, 12% is a really good rise. Absolutely not to panic. I just think you will sort of see some differences in the market. We're seeing a few more properties available, so quite a bit of choice for people in the market at the moment, which is great, because a lot of people weren't moving for the fear of not being able to find something. And as more properties are becoming available, more properties are listing. So it's having a nice effect of giving sort of choice in the market.
Yeah. I wonder if a few more people will put their properties on the market now as well, if they're concerned that potentially we might see a decrease in the prices slightly, or a bit of hunger come out of that market. I wonder if some landlords may consider selling, might force some people into making a slightly quicker decision about moving. So moving now rather than wait until the end of the year or beginning of next year. So which will bring a few more properties to the market, which is what we need. So.
Well, that might cause opportunities. So as we were saying, as these prices are increasing, it's not just in the Bank of England base rate, it's in any other loans that you might have. Your credit card rates might start to change on you. Obviously, fuel bills. I mean, at home, my bills at home have doubled. The direct debit amount that we pay on a monthly has literally doubled, and other things are creeping as well. Fuel prices for the car.
The car itself.
There is squeeze on from all angles for people. So that is having an impact around sort of general affordability. But we were talking to a mortgage advisor this week, and he was saying that already the mortgage companies are building this in. So they're already building this rate rise into their current pricing. But what more importantly and more notably, they're building in affordability checks against the current environment and the current sort of landscape in terms of the pressures on people for costing. So I don't think we're going to see them being overzealous in how much they're going to be willing to lend. So multiples of how much they'll be willing to lend people. So people's affordability might be hampered a little bit when you're looking for a mortgage. But I think tips around that is to continue to ensure that you've got the best deposit that you can put forward. Make sure that your credit and everything behind you is as clean as possible. You don't have these outstanding little loans and this here and this there. Try to clean that side of things up and talk to a mortgage broker nice and early in the process, so that they can advise you and maybe give you some key things to do in order to improve your chances of obtaining a great mortgage and getting the maximum affordability that you need in order to buy the house that you want.
Yeah, absolutely. But it is going to be lower. You're right. Yeah, they're being sensible now. And I think it's right. Yeah. We don't want problems to occur.
We don't want to 07 on us again. No, absolutely not.
So it's got to stay sensible. And hope everyone is being sensible at the moment. And buying within their affordability. Make sure, you're comfortable at home with all your other bills. Like I say, everything goes up when the interest rates go up, all your loans do. So expect that to keep going. And it will just, probably slow this market down a bit. So,
obviously, again, if we can be of any help at any point in these sort of questions and some of these early sort of discoveries around, like, should I buy this year? What should I do? And take those steps. Please reach out and let us know. We'd love to be able to help you and put you in touch with some great people that can help advise around the financial side of things before you step into the market and start searching in what we are seeing is a far more busy market for available properties. So it's exciting. The changing of markets always bring out different things and allow great agents to shine. So I'm really excited about that for us and our team. Thanks ever so much for joining us this week, and please don't forget to subscribe to the channel and catch all of our updates in the property podcast, as well as the property listings and different things we do in and around the business. Thank you so much. If you and your business would like to feature in an upcoming episode on our Meet the High Street season, we'd love to hear from you. Please get in contact.